You're watching Captains of Industry. My name is Charles Gitonga, and I'm now joined by Dan Awendo, who is the Managing Director and also one of the founders of real estate company Home Afrika. Thank you so much for your time.
Thank you, Charles. Thank you for inviting me.
Yes, so your company is listed at the Nairobi Securities Exchange. But I want us to start this conversation from the point that you're one of the founders of this company. And that's a story that we've not heard. Tell us about that.
Well, like has been said before, I think both in the grapevine and in the mainstream media, Home Afrika started out as almost like a charmer. So a group of friends came together, people who were really mainly in the same industry. So we had architects, we had engineers, we had quantity surveyors. I was supporting the finance side, and that's really how people came together. The idea around it was, could we come together and develop projects that can be done that require a lot more resources than that we would not have been able to do individually. And so the idea of coming together was to make sure that we can now engage in projects that were much larger than we could do by ourselves. So that's how we came together, and that's how we started, making sure that we bring all the skills that are necessary, and of course having a much bigger resource pool to be able to do bigger projects.
And this happens not to be the only company that you founded. You founded and led until most recently Investec Capital. And we are talking about over 25 years in corporate finance, accounting, and also how would you talk about your journey?
Well, it's been an interesting journey. I guess to me it's more a journey of learning. I've been an entrepreneur since I was 16 years old. My first business, I set it up when I was 16 years. So to a large extent, business, creating business, growing business is what I really know. And so what I find through that journey is that there are always ups and downs. You always have to be ready for the downs. You always have to try and save for those downs. When there are days when you have the upside, you make sure you don't over celebrate, because the down is coming as well. And so I found that it's not just expecting to work the business in a regular fashion, but also surrounding yourselves with the right people, surrounding yourselves with the mentors and coaches people who've been there, done that, and can walk with you as you grow the business. So for me, that has been the main area. There's lots of pain, obviously, because particularly when it's a startup, there's a lot of capital requirements. You really don't know what to expect around the corner. But you find that so long as you have a belief system that helps you to move with faith, and that to me has been a significant part of what I've been doing, you tend to continue moving and growing and learning and making a difference.
Mm-hmm. And so we are talking about this transition from you moving from being the managing director of one company that you founded to another one that you founded as well, but this one is a listed company. So there's more public scrutiny. You're supposed to publish your books every year or every so often so that people can see how the company is performing. The shareholders go beyond the members of that small group of people that you started with. How has that transition been for you?
It's not been very difficult. Let me explain. When I started Investec, I started off as a one-man show. But over a period of time, I realized that the capital requirements especially and the technical requirements were way above what I had. So I opened up the company and brought in new shareholders and investors. So by the time I was leaving or retiring from a CEO-ship of Investec 2 years ago, 2.5 years ago, I was already running a public company, or even though it was not listed on the stock exchange, it was listed on what we call the OTC market, a Central Investment Bank, with more than 70 shareholders. So the transition into Home Afrika was not too complicated, because I had already gotten so used to engaging with a much larger crowd of shareholders, a larger crowd of directors, and therefore being accountable to these individuals as you now grow the business that they have given you responsibility over.
Mm-hmm. So I want us to go through a bit of the bottom line numbers that we've seen Home Afrika post, especially after listing. And 2014 we had about a 90% drop in profit, about 9 million. Then we had a net loss of about 390 million the following year. Then 2016 that was cut by almost half to about 168. And So it makes me wonder, as one of the founders, do you feel like the company is where you imagined it to be, based on some of this performance? Because I would believe you invested so that you could, get some of this return on investment.
Let's remember that real estate is long-term, especially our kind of real estate is very long-term. I'll give you an example of Miga, which is our largest project, 774 acres project. We went into it as land developers. Our primary responsibility is to develop the infrastructure and sell the parcels with a developed infrastructure. That's a 7 to 10 year project. So if you're looking for profits on an annual basis, you're hardly ever going to find them, because we are not a retail type business. During the initial 7 years, it's about investment. So a lot of the losses that you're seeing as posting, it's because of the investment that we're doing in the projects, but also the costs the attendant costs that come with investing in that kind of a project. Expectation is that towards the end of our project, that's where the profits lie anyway. Because it is only at the end of a project that you start selling your parcels at a better premium. You sell them faster because in any case your infrastructure is completed, and that's where profitability comes. So for any investor who understands real estate, they will understand that when you're looking at a long-term opportunity, the profits usually are at the end, not early in the project, and not even in the middle, but at the end. So I'm not too worried that we are posting interim losses, but it's because this is our investment stage, and that once we complete the infrastructure, we will then see profits coming from there. If you look at our balance sheet, for example, we have large figures in there that are deferred income, which means that this is income that has already been booked, but cannot showcase within the profit and loss account because we have not completed the project. As we complete the project, that deferred income will move into our P&L.
What are then the short-term mitigations to this? Because at the end of the day, year in, year out, you've got bills, you've talked about new investment. These are long-term projects. So what are the short-term fixes to this kind of, I don't know whether to call them challenges, because it doesn't sound like that's what it is from your end.
It is a challenge. One of the mistakes we made earlier on is that while we entered a business environment that was profitable, we took very long-term projects and we only stayed with long-term projects. And so in the interim, you have to finance your day-to-day requirements and obligations. So we did not put into consideration the fact that we will need this type of working capital and that we will need expenses managed in the interim period. So one of the things that I've come to now do with this turnaround project is to introduce shorter-term projects, liquidity-based projects that will help us then manage the day-to-day operations, help us manage the day-to-day obligations, keeping in mind that our profits still will remain in our balance sheet and that those profits will still come into our book down the road.
Right. You said you are kind of real estate.
Yes.
And someone, maybe an investor outside of Kenya, would want to know, what is Home Afrika's kind of real estate?
Okay. Let me explain that in two ways. Home Afrika, first of all, started out to resolve the housing need in Africa and in Kenya to start with. So we were very focused on looking at the housing sector. But in the initial parts of the business, we also did realize that we require significant resources, not just now, but also in the future. And so the projects that we started with were not necessarily purely housing. We started with projects that were resource generating projects. So like the Morningside Office Park. It's an office park, it's not a housing project. But the office park was going to give us profits so we can be able to plow back into more projects as we head towards our housing dream. Now, that said, it meant therefore that even as we do the initial projects, we are focusing at creating profit that can help us move to the next level. So the projects that we have done so far have been medium income to high income housing projects. Or even if you look at Miga, it's a lifestyle project. So we are offering not just work, but we're also offering play because we have a golf facility, and we're also offering other amenities, hospitals, and so on and so forth. That would enable us, once we complete, to generate enough profit to now help us focus in what the future is really about, which is housing.
Yeah, when you came out at the listing in 2013, there was a lot pegged on the Migaa project. How far is it? What's the kind of investment that's going on right now there?
To date, we have invested about 1.8 billion shillings. We expect to invest another 1.5 billion to 2 billion shillings to complete. We are hopeful that that can be done within the next 3 years. We are currently at about 46% completion. We think that that will be accelerated quite quickly over the next 1 year, especially as we finish with our fundraising process, because that's something that we are currently going through. So we see completion not too far.
Right, and we'll be talking about that fundraising a bit later in this interview, but you also have this Go County strategy, and we are now operating in 47 different units in the country in a devolved system. You're saying you have projects worth 20 billion. What's the promise on this project? Is it housing? Is it new cities? Because you've seen now people investing in mixed development, and I believe Migaa is one of them. What's the promise like?
So there are two things here. The Go County strategy still remains one of our plans, but it's in the long-term plan as opposed to the short-term plan. And it's important for us to know that, because we are not looking to go into the counties before we finish what we already have. So the first primary item that we have on our books, and this is part of the turnaround strategy, is to finish with what we have and finish well, and keep our promise to our clients and to our customers. Once that is done, then as we now look to the future, we expect now to go into the Go County areas. And even as we go into the counties, our expectation is to focus more on housing, and especially the affordable housing space. We believe that's where the largest need is, and we also believe that's where there is profit.
All right, Mr. Awendo, let's take a break there, and we'll be back with the Managing Director of Home Afrika, just looking at what's the winning strategy here, just looking at some of the numbers that the company has been posting, not so positive, but he's explained that. So what's a step forward? Don't go too far. Welcome back to Captains of Industry with me, Charles Gitonga. I'm in Nairobi talking to Dan Awendo, who's the Managing Director of Home Afrika and also one of the founders of this company, which is also listed at the Nairobi Securities Exchange. Thank you so much for your time. So we've talked about long-term projects, but I want to understand how you're innovating before you get this profit. What are the new revenue streams now that your shareholders could count on between now and when we have maybe a complete Migaa project or any other project that you're focusing on?
Right. So the first priority, one of the first priorities under the turnaround strategy has been to create liquidity for the company, to help us at least manage the day-to-day expenses and obligations, meet obligations. And so we have introduced two things that we are doing. So instead of going for long-term projects, we have also introduced shorter-term projects. And by short-term projects here, I mean, for example, we have gone and become a land packager. So we go and buy land. We package the land in terms of changing the use. We package the land in terms of doing a master plan and then selling the same to third parties without necessarily doing any additional work. We don't have to do any infrastructure work in that case. So we've been able to do that, and that's going quite well. One of the other things we have done, because we are a listed entity, we realize that we have a significant resource in the form of our shareholders, in the form of our customers, those who have been here before and those who we are currently acquiring. And that's a huge database of possible customers for our products. And so we find that we also have the commercial engagement. For example, we've significantly improved our commercial engagement, which means we can sell quite a lot. And so we are finding that we have extra capacity to sell for others as well. So we're getting into third-party sales, which means that those of our shareholders, those of their networks who have property that they want to sell, we are now starting to engage with them directly. That is giving us a revenue stream that we didn't have. It's short-term, able to help us with the liquidity, short-term liquidity, but also prepares us to take advantage of the long-term projects that we have in our books.
All right. And talking about those long-term projects, what kind of funding do you have? To what level? Because I understand last year in March, there was an announcement that you would be raising 5 billion shillings. How far is that as well?
So the idea was for us to get our shareholders to approve a 5 billion shilling tranche, whether it's debt or equity, which we would raise to help facilitate the completion of our projects. But we're not going to go to the market and look for 5 billion PAP. So we have cut them down into tranches, and the first tranche is for 2 billion shillings. We are currently deep in negotiations with different types of strategic investors, local and international, with a view to hopefully close within a short time, which can then take us back into completion of our projects, because that has become obviously the primary objective for the company.
Right. When you say close in within a short time, maybe we can talk first tranche. When should we expect that deal to be closed, and then and again, how many tranches are there?
So we expect the first tranche, as I said, to be about 2 billion. Yes. Hopefully, God willing, we should have it done within the next 6 months. Once that is done, obviously working with the strategic investor who comes on board, we'll then start planning for the second tranche. But also depends on how quickly we want to roll out the rest of the project, particularly Miga. That is our largest project and most important for now for us to finish.
All right, and let's talk about these investors, and particularly the ones that have shares listed on the NSE. I mean, for someone who perhaps bought the share during the IPO at 12 shillings, they may not feel so much encouraged now, because I'm looking at a 52-week price range of about 75 cents to 2 shillings and 75 cents. Right. So it doesn't look a bit very encouraging to any investor, retail or otherwise. So how then do you convince these people that you have the right projects, that you have the money or have good plans to get all the money at the least cost possible, so that they can keep holding you up at the exchange?
Let me put it this way. The reason why we went to shareholders is not just to get them to approve for us to raise 5 billion shillings, but it was important for us to get them to see that because of that level of discouragement, we are not likely to do a successful rights issue. We are not likely to get back to them and ask them to put capital and they go ahead and do it. And so we needed to get them to approve that we can talk to third-party investors, strategic investors, which is what we are doing. So our expectation is not to raise the money from our current shareholders, but rather outside shareholders. Now, the outsider shareholders are a little different in terms of how they engage with opportunities. First, they're very long-term in nature. They look at projects of our type, and they look to the opportunity of creating value for themselves over the long term, number one. Number two, they're much more aggressive. And so they look at companies, especially companies that may not be looking very good initially, and that's in the public eye. But they go deeper and understand management, they understand governance structure, they understand the plans that the company has, and can therefore forecast a better future of that particular company. And so you'll find them investing, while the existing shareholder may not want to take that level of risk. But when you're talking about private equity funds and other strategic investors, they do take these opportunities. And that's why we are deeply in engagement with the investors. It's not that they don't see the risks. They, in fact, see the opportunity.
So in your opinion, what really made this share price come down and stay down for such a long time? Because maybe you are looking for price discovery, but looking at the projects that you have and the portfolio that you take to your investors, then I don't see how the math is balancing there.
I think one of the things that has happened is that initially we suffered quite a bit of negative public opinion. Looking at our governance structure, looking at the capital raising that we had done and was not 100% successful, that already gave a very negative view in the market, regardless of the fact that the asset base of the company did not change. So the value, the intrinsic value of the business continued to be good, but the negative perception in the market, which by the way drives the prices a lot on the stock exchange, it talks a different language. And so I find that over time, my expectation is that this price will correct. Why? Because when we do invite investors who see long term, you will find that that will give us the catalyst that we need to get our projects moving, to get our projects completed. And as we get into completion of projects, the price will automatically correct.
And so your opinion is right now the price that we are seeing at the Nairobi Securities Exchange does not reflect the fundamentals of the company.
I think the price completely disregards the fundamentals of the company, even if you look at the basic balance sheet. I think that the price is very good right now. I think that a long-term investor would be buying some more today because the future is much better for them.
All right, let's hope they do. So the governance issues, are we past that? Because I think when you talk about some challenges in the governance that led to a bit of negative public opinion, it's not just Home Afrika. We have been through a phase in corporate Kenya where we saw cases in our retail sector, banking, all these issues coming up in the last 3 or 4 years. Are you out of the woods yet? What's your strategy?
I think I can confidently say that we are completely out of the woods as far as governance is concerned. Yeah. Governance was one of the 3 primary things that I needed to deliver within the first 3 years of my involvement as a turnaround manager for this company. In fact, it was a top priority. Now, governance is in 2 forms. One is looking at the board, the size of the board, looking at the skills in the board, and looking at the engagement of the board and how they operate and run the company on a periodic basis. We brought the board down from 11 to 7, so it's a lot more nimble, it's a lot more proactive in the way that it works. The level of skills were also completely different. Remember, initially, not that we had a bad board, it's just that we had people within the same industry. So we needed to bring in new skills, new eyes, new set of capacity that will help us move in a different direction. And that, I think, has already happened. We see the new board really adding a lot of value to the things that we're doing. So that's one. The second thing is on management. We had a very silo-based organization by the time we were starting this turnaround process. It's very difficult to work in silo organizations, particularly if it's a small organization like Home Afrika. So one of the things we needed to do was to get rid of all those silos, create a much more flatter organization, and push for a performance-based organization so that individuals in the company are pushed and are remunerated based on performance as opposed to other functions. And so that has significantly worked for us. And we've seen the company, at least from a management perspective, becoming really efficient, commercially astute, financially astute, and so on and so forth.
All right, so looking forward, let's first talk about 2017. I know you will announce your financial performance for that year in the coming weeks, but how was that year for you? And looking forward into this year, how are things looking?
I think what I can say is that we had a better year than we had before. My view is that a lot of the people in the real estate sector in Kenya had a very difficult time last year, given the double elections and so on and so forth. But we actually fared much better. At the end of the day, we did, I think, at about 20% higher revenue than we had done before. And that already showcases the changes that we introduced. It showcases the value addition that we brought into the company to help us really change the fortunes of the company. I am confident that even as we start 2018, that the growth trajectory will continue, especially as we bring in new capital and complete our projects.
All right, so for the numbers that you'll be giving us in a few weeks, are we going to see a situation where this new revenue, short-term new revenue streams are going to be quite pushing the numbers to a positive direction?
Not necessarily. These new revenue streams are still part of property, so we will not necessarily separate within the financials. But what we're going to do as we report our financials is to try to get the investor to understand how we do our financials vis-a-vis how others do their financials. Because a significant part of how our financials are represented is based on the level of completion of our projects as opposed to the number of plots we have sold or properties that we have sold. So there's always a discounting element and that brings the numbers lower than what they are actually supposed to be. So we will be trying to communicate a lot more to the investor so that the investor sees the actual work that went in throughout the year and how much value in terms of revenue and how much value in terms of cash flow that we've been able to deliver during the year.
All right, Mr. Awendo, unfortunately, I'm out of time. Thank you so much for speaking to us. And he is the Managing Director of Home Afrika. And just looking at the performance of the company and also looking at him as a serial investor and entrepreneur, founding different businesses rather. So that's it for Captains of Industry this month. My name is Charles Gitonga. See you next time.